Hi there, fellow traders. Welcome back to our channel. If you're looking to elevate your trading game, you're in for a treat. In today's video, we're unveiling the top 5 indicators that every trader should have in their toolbox. Whether you're a beginner or an experienced trader, these indicators can provide valuable insights and help you make more informed decisions. So, let's dive right in. 1. Moving averages. First up, we have the classic moving averages. These lines on your chart represent the average price of an asset over a specific period. They smooth out price fluctuations, making it easier to identify trends. The golden cross, where a short-term moving average crosses above a long-term one, can signal a bullish trend, while a death cross indicates a potential bearish shift. 2. Relative Strength Index. Our second indicator is the Relative Strength Index, or RSI. This oscillator measures the speed and change of price movements. RSI values range from 0 to 100, with readings above 70 suggesting an overbought condition, and readings below 30 indicating an oversold condition. It's a great tool for spotting potential trend reversals. 3. Bollinger Bands. Next, we have Bollinger Bands. These consist of 3 lines around a moving average. The outer bands widen when volatility increases and narrow when it decreases. A price approaching the upper band may be overextended, while a price nearing the lower band could signal an oversold condition. Bollinger Bands help you gauge potential breakouts and reversals. 4. MACD. Moving Average Convergence Divergence. The MACD, or Moving Average Convergence Divergence. This versatile tool combines 2 moving averages and a histogram. When the MACD line crosses above the signal line, it's a bullish signal, and when it crosses below, it's bearish. The histogram reflects the difference between the MACD and signal line, showing momentum shifts. 5. Fibonacci Retracement. Last, but not least, we have the Fibonacci Retracement tool. Derived from the Fibonacci sequence, these levels help identify potential support and resistance levels during price corrections. Traders use Fibonacci retracement to find areas where price might reverse or continue its trend after a pullback. And there you have it, the top 5 indicators that every trader should know. Remember, while indicators can provide valuable insights, they should be used in conjunction with other tools and your overall trading strategy. Take time to understand each indicator's strengths and weaknesses and practice using them on a demo account before applying them to real trades. If you enjoyed this video and found it helpful, don't forget to give it a thumbs up and subscribe to our channel for more trading tips. Until next time, happy trading!